Hello, this is Rob with the Oil Trading Room at IndicatorSmart.com. Thanks for coming in today. Does everybody hear me all right? You can use your chat there. Please let me know that you hear me all right. Awesome, awesome. Today, we are covering trade markers, achieving execution level, accuracy, and precision in trading. I'd have a little bit different title than that. We're going to see some really cool stuff today. Some really cool stuff. Makes me think of Ed Sullivan when I say that, for those of you who are old enough to remember. We're going to have a really big show. A really big show. So before I get started, and I also have Chris here with me. Chris has coded this, what I'm about to show you today. It's an absolutely brilliant piece of work. Utterly brilliant. I don't even know how you could be smart enough to do this, but he did. And so you'll see what I'm talking about. First off, past performance not necessarily indicative of future results. There's a risk of loss trading futures. Use risk capital as risk capital. Don't use grocery money for trading. We are going to do. We are going to cover some things that are going to involve performance related, because trade markers, after all, is a performance related tool and a performance enhancement tool. And I have had the wonderful opportunity with trade markers when first it was introduced to me by Mike and Chris, that this program really changed a lot of people's lives, because it made it possible to get in and see and experience the execution level world that is in there. And so I'm going to talk to you about looking at charts and understanding charts also from that kind of a viewpoint. Yeah. It's kind of a change in your thinking, at least the way I do it, because you're talking about changing from thinking about signals to thinking about essentially like probability clouds on your chart. That you know that certain probabilities happen around certain events and certain things on your charts. This is a very cool way to be thinking when you're looking at charts, because you're no longer thinking about signals. Yeah, no longer thinking just about signals. Yeah. So what we're going to be covering today, some of the topics that we're going to talk about and share. Trade markers, what can it do for you? I've already talked about that a little bit. Yeah. How you tune into and find trading sweet spots using this tool and this technology. And so in that same way, how to turbocharge your existing method, whatever that may be. Or to find out that it just doesn't hold water very well and really fast. Yeah. What's the best stop to use? What's the best target? How much more is there that I'm not taking that I could be taking? Can I get a discount? Or am I finding places on the chart that are so efficient that I can't even get in at a discount? Yeah. And so we're going to take a tour, if you will, of trade markers and the features that are in it. Yeah. The features that are in it. So trade markers, what does this tool do? It enables us to mark our charts so that we can mark our trading points on the chart. Yeah. And so the biggest thing that this did for me and many other users was to gain confidence in the trading setups so you can take them with ease. Because you just know that that point on the chart is got a certain probability, a certain reward, and a certain risk associated with it. You know? The other thing that trade markers can do for you is to help you to be able to hold your trades through expected drawdowns and stick to your setups, because you know what to expect. Yeah, it's moving against me, but I know that my probabilities are where they are, and I've tested this over and over, and I know it's good. Yeah. And if it isn't good, you're not condemning yourself because you know you did the right thing. And I'm going to show you how to achieve that in today's webinar and a whole bunch more stuff. Yeah. So let's kick around a couple of concepts before we get into the nitty gritty with it. Yeah. So number one, in the methods that I'm going to show you today, there's a difference between back testing and the methods we use. Now, for decades, when I did research, I was using back testing to hope that I found something that would be profitable. Yeah. There's a very, very big difference between that and taking something that is already known to be successful and testing it, because you're not back testing anymore, you're really forward testing in the past tense. Yeah. And so we have some methods that we use, for example, in our trading room, using smart patterns, using Bayes' theorem. Bayes' theorem has been in use for close to 200 years now. And as much as fundamental statistician fundamentalists would like to speak out against it, it has an amazing track record over time of being successful. And we use that, and you can use trade markers along with that kind of thinking. And so we'll probably touch on that a little bit. Yeah. We're going to talk about, and I might just talk about it right now, why is win percentage so important, and what is the edge to that? Because there's a lot of different things in trade markers that you could optimize to. You could optimize to a win percentage. You could optimize or view from the perspective of getting larger winning trade. Usually that's at the cost of the win percent. And we're going to talk about what the edge is in doing that. Yeah, I'm going to introduce a concept having to do with the edge. And so when we look at these things, we can understand where we are in a bigger picture. And this helps us to understand also where we are in such a way, like I was discussing before, you know what's right and what's wrong while you're doing the trading. You don't get trapped into a mental trap. Yeah. And why is it important to have the information, results that trade markers can show you? Yeah. Now, you can use, a lot of traders use in NinjaTrader, for example, use market replay. Market replay will move the chart along for you and have you take a look at the chart as it unfolds, but you're playing it back historically. Yeah. And that tool has its purposes, but that's a very slow way to go. With trade markers, we can jam through a chart in just minutes and get answers. We could say, I wonder what would happen if I did such and such instead of this or that. And within several minutes with trade markers, you can have an answer to that. Yeah. And so I'm going to show you how we do that. All right. The tools that we're using today can be found at indicatorsmart.com. I'll give you some links and stuff later. And these are methods. The methods I'm going to use are methods that we use in our trading room, oil trading room. Trade markers shows you visually how your entries, targets, and stops perform, so you can learn what really makes your trading method tick. Yeah, and it shows you statistically how each of these perform over time and by context. Yeah, and this is a trade marker report, and we'll be taking a closer look at that shortly, and what we're going to actually make one of those based on some trading rules. Yeah. Now, I had mentioned already before, you can do these things really fast, the kinds of things I'm talking about. You can get answers really quick, and that increases your or decreases the amount of time it takes you to learn something, in addition to cementing into your consciousness something that you know that works. Yeah, and we'll cover that more in a few minutes. So we were talking about backtesting a couple minutes ago, so I put this slide together for that. Backtesting seeks to find a desired result, often without a method. In other words, where one is often seeking a method in testing in this manner. Yeah, so that could also be called data mining. Yeah. But what we do is we take methods that we have a known outcome or result within a certain framework, and then we use a tool like TradeMarkers to get down to the nitty-gritty and refine down at the execution level. And like I said, I would hope, I'm hoping that while we're marking out some of these trades that we're going to do in a few minutes, that you can begin to imagine that there's a probability field that surrounds these trade points. And so you can start seeing the chart in a little bit different way. Yeah. This enables us to refine things like entry discounting. Can I get a discount? How long are the trades taking? Yeah. What's the win percentage that I'm getting? What's the best target or stop to use and the associated ratios? Yeah, and we're gonna delve into that in just a couple minutes. So we were talking about Bayes' theorem a couple minutes ago. Bayes' theorem we use to stack different things in our favor. On the method that I'm going to cover with you today, we're going to take two things. Actually, it's actually three things. We're going to take three things. We're going to take price action, and we're going to take momentum, and we're going to turn that into a little system. We're going to do some testing. We're going to mess around with the numbers and the kinds of things that we can do in TradeMarkers with. Yeah. As a general rule, higher win percentages give you a bigger edge, and I have that here. Yeah, so we want to just get this, and then we're going to go look at some charts in a minute. Why is win percentage so important? Well, I've been training traders for a long, long time. And one of the things that I've found that's more important than anything else is that particularly in the early stages, a trader has a high win percentage. Why? Because he's not having negative events happening all the time, or what he might perceive as negative events. So new traders who achieve a high win percentage in their trading are more likely to succeed. And for this reason, focusing on getting a high win percentage can lead to higher success rates among traders, especially in the developmental stages. Yeah. Another thing that can help also that we've already mentioned is the time and trade. You know, what if all your trades lasted less than 1 minute and you know, with a 90% win rate, or, you know, 2 or 3 minutes, something like that, just boom, 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 boom. High win percentage is often related to shorter time in trade. This is psychologically rewarding. It also allows for a psychological reset. This is a big deal, which improves learning. So if you can take a trade, be out of it in a relatively short period of time, you don't have negative emotions associated with that. And then it gives you the opportunity to reflect on the trade, and in that way, your learning is greatly accelerated. Yeah. And like I'm saying, particularly in the early stages of your development as a trader. Yeah. So edge is, we were talking about that a minute ago. Edge is the amount by which you exceed your break even. Yeah. So you take the stop size that you're using, and you divide that by target plus stop, and you subtract that from your break even is the amount by which you exceed that that formula there. Yeah, stop over target plus stop. So we'll look at that also in a minute in TradeMarkers. Yeah. So kind of I sum all these things up. Yeah. So we're looking for high win percentage, preferably most of the time. Less time in trade. You know, all these things are a choice, actually. Yeah, they're a choice. Get more out of your trades if you can, or know that you can if you want to. Yeah. A lot of times you might choose just to take that quick pop or something like that, less time in trade, and have it done. Yeah. As opposed to holding out for a 40 tick trade or something like that. Yeah. Know the outcomes so you're not neurotic. Yeah. Refine and study wins and losses for even more learning. Share results with others. TradeMarkers has the wonderful ability to be able to share files with other users. I have traders send me files with TradeMarkers all the time, and I can look and see exactly where they're marking their trades, which is pretty cool. And across any time zone worldwide. So you can figure out what works best and fast. You can quickly scan losing or winning trades and learn what happens at exact entry points you're trading at. I'm going to show you some things here where you might go in and remove certain trades and learn kind of backwards what is a better strategy. Like you might not take certain kinds of trades or start filtering trades and seeing what the result is, and you can get that pretty quickly using TradeMarkers. Use it for marking trades in real time. This is a cool feature that I really like, is that during the day, if I have a strategy that I've been working on in TradeMarkers, I can click the TradeMarker buttons on my chart and it will actually update it live in real time as though it was an actual trade. Yeah. So I think at this point, we're going to go look at all these different features in TradeMarkers. Yeah. And I'm going to pull this up here, this chart. Let me know, does this chart look all right to everybody? Does it look pretty clear? It's not flashing or anything like that? Okay, cool. Okay, so here's the strategy that we're going to test in TradeMarkers. And these buttons up here are our TradeMarker controls. Yeah, there's a B for a buy. Yeah, I can click that buy button and come down and put in a buy right there if I want to. Yeah, or I could take this and I could click in a sell right here, or say, a sell right there. Yeah, I can delete the TradeMarkers from the chart if I want to. Yeah, with this one, and this one I can update it. And on this one, I can open the report window. Yeah, I can open the report window and it'll give me this report. Yeah, and then it has all the different tabs on it and everything. This is where we can save it and share it with other traders and things like that. We'll go over that in a couple minutes, okay? Now, one of the things that I was going to share with you today is I was just going to keep it super simple because I didn't want to get off track about, I can also just click that and delete it if I want to. Yeah. And just click it and delete it. I can click this and delete it. Yeah. And then I could just hit recalculate and it'll take those off of there. Yeah. So I just was going to do a really easy strategy. I've got about 20 days on this chart. And so what we're going to do is we're going to take this smart price band right here. We're going to take the smart price band. And as long as that thing stays cyan, we're only going to consider going long. Yeah. And if that smart price band is red, we'll consider going short. So that's our long short filter. Yeah. This also keeps us in alignment with the structure of the market. The market's going up. As it goes up, it'll start pulling the smart price band up and it'll stay cyan, and then it might roll over red, and then it continues cyan. This is today. Yeah. Now, as long as I've been training traders, I have been teaching them to trade what we call a T2 divergent pattern. A T2 divergent pattern is a pattern that goes with the trend. It's a pattern that goes with the trend. And the way that you can identify the T2 pattern is when it is going lower while the market's going higher. You'll have what's called a T2 divergent pattern with trend. So now there's several different versions of that. You can have them that don't cycle, and you could have them that slide, and you could have them that that are just going with, yeah. And so the basic idea here is that this is sliding from here. Divergent patterns are made point to point, point to point, generally speaking. And so sometimes you won't always get the dot on that. And so we call this a slider, where you have reversal bars in here, these two bars right here, and it doesn't get a dot. It should get a dot for pretty much every one of them. This one is associated with that dot, and then this one's associated with this dot, etc. Yeah. And so when you see the market moving sideways, like it is right through here, and this is sliding downward, and the price band is cyan, then that is a buy signal when it hooks up. Yeah. This tool right here in the middle panel is called the trap trader oscillator. We're not going to use that, just to keep it simple, but you can really turbocharge what we're doing here with that and get into all kinds of themes and variations that you could use trade markers to refine with. Yeah. And so market comes up, it makes a new high here, price band is cyan, it comes back down here, and you're sliding again, and so there's another buy signal there. Market comes up, it goes higher again, pulling the smart price band higher. Yeah. And then this goes lower, point to point. And when it hooks up, there's another buy right there. This comes up here. We don't have a lower smart momentum on this one, and so we don't count that one. Yeah. Not for the purposes that we're doing here. This one right here could be a T2, but it's marked on there. But because the smart price band had turned red, we're going to just take it off of there. Yep. And then we commence going higher again. The smart price band turns back to cyan, and we get this going lower again over these intervals. Yeah, sliding also. And then here again also. Yeah, each of these a buy. So today, for the regular session, just using this method, you have 1, 2, 3, 4, 5 trades. Using trade markers. Now, doing that, I can also go out to different target levels. Yeah, I can go out to different target levels. And then, if I want to, I can go in and I can see a graph of what that looks like. We've just got one day in here right now, just today. Yeah, just today. And but we can go look at the periods. Yeah, and we can break that down into day of the week. Today's just Thursday. If we have multiple days in there, which we'll load in a couple minutes, I can mark this out by half hour of the day, by 30-minute period of the day. I can mark it out by hour of the day. Why is this useful? Well, in a couple minutes, we'll take a look at this again, and you'll be able to take a look and see where this is making the money or not, where it's making the money or not. What times of the day are best. Okay, so as we go back, I haven't marked the rest of these on here, and we're just going to do it during the day session. Yeah, A, B, C, D, E, F, G, H, I, J, K. These periods of the day. Now, I'm not going to spend a half hour going through. I got 20 days on here. I marked them out in advance. And I can go to Trade Markers, load file. Yeah, and I can grab this smart price band T2, and I can say load trade marker and settings. Yeah, it tells you right there, loaded 70 trade markers. Yeah, I also sent this file over to Chris earlier, and he was checking it out. Yeah, or I could send it to anybody here. This is this is pretty useful to be able to do this. Yeah. And then what I'm going to do is I'm going to come back to the tab here and I'm going to say recalculate. And then you can see there's 69 trades over the approximately 20 days here. Yeah. Over the approximately 20 days. Now, I had just marked some trades on here, and you'll notice that it kept those on there. Those were actually not part of the file. Yeah. These I had marked out for today because I had done this yesterday. Yeah. And so when I say recalculate, I can pick that up. I can also set out different target levels, yeah, for this approximately 20-day period. Yeah. So what I want to do, let's cover these. This is a stop level. Yeah. This is a stop level. I can set a break-even stop after a certain number of ticks. I'm not going to get fancy with any of that kind of stuff, but you can use these things in powerful ways. You can set a trailing stop, and you can set flatten at a certain time of the day. 11:30 would be the end of the day session. So it would cut off any trades that went past that time if you want to. Yeah. Now over here on the visual options, I've got everything checked on here. It's going to show you where the entry is with the arrow. It's going to show you where target 1 was completed, target 2 was completed, target 3 was completed, and it's going to show you where the stop was. Yeah. It's going to show you where the stop was. You can display this in currency, ticks, or points. Yeah. And so usually I leave those checked because it gives me a visual presentation of what these trades are on the screen. Yeah. Yeah. Or you get a loss, you can see, it will show you where it stopped out at. Yeah. Now that I've got some of these things loaded in here, different trades over the 20 days, I can go in and I can look at all the different periods of the day. Yeah. Now this is for 3 legs of the trade is the win percent. Yeah. This is by hour of the day. I can mark it out by half hour of the day. I could ask myself, where's this thing making the money? Yeah. I could come back over here and just take it back down to 1 position just for a scalping system. And I could look at these periods and I can see that what the performance is for any given period. Yeah, I'm not sure that's correct actually. Why that? Let's see. Yeah, these trades are actually should be much shorter than that. Something's going on there. Put a 0. Put a 0 where, Chris? Oh, in the size? Right here? Oh, these guys. Oh, yeah. Yeah, that'll help. Thank you. Okay. Yeah. So this kind of a scalping system that we're looking at right here, the average trade's only about, 3 minutes or so. Yeah. I can see where this thing doesn't perform very well. We know that during this time of the day, things are not all that great. Yeah. If you're going to trade later in the day, it'd be better to pick up these 2 periods and not trade during these periods. And we know that from our maps that we use like in our trading room and things like that. Yeah. And so we can parse this out by long or short and all the individual entries if we want. We could put in these guys again, and then I think we can come back here and look at this as individual entries. Yeah. And we can group them in different ways. Yeah. So this is my favorite tab right here because I like to just keep things simple. Usually when I go and do a study like this, I will screenshot it, and then I have a folder on my machine that I keep these things in. Yeah. And then it enables me to just have a picture. Now, I had been mentioning earlier that what this is actually telling us is telling us what the market looks like across these periods here. So I can look at these different legs and I can go, oh, well, this is a 5-tick target, a 10-tick target, and a 15-tick target. Yeah. This is a 5, this is 10, this is 15. Yeah. And so I can, when I look at this should really be bigger than that, times 2. Yeah. So if I see that that's bigger, I might be a little bit more excited about it. So I can look at what the statistical edge will be for each of these occurrences. If I've got a 92% win rate, that's a 17% edge on a break even with a 15 tick. It's 3 to 1, and so my I need 75% winners on this leg to break even. Yeah, but I'm getting 92, so it's a 17% edge. 17% edge. On the second one at 77%, that is also a 17% edge. So it tells me these two cases are statistically identical. Yeah. And then on the third case, it's 67%, and 67% also gives me a 17% edge. Yeah. Now, let me talk about edge for a moment, why this is an important number. I grew up, my father owned a furniture store, and growing up, I worked for him for many years, and my father wasn't a man of many words, so when something came out of his mouth, he usually remembered it. But he told me, he goes, yeah, by the time it's all said and done, I only get about 2% of all the business we do. Yeah. And by the time I pay the rent and I pay the utilities and I make the payroll and I pay for the vehicles and the insurance and all the stuff, I get 2%. So if we do $2 million a year in sales, I make a couple $100 grand a year. Right? Now, this is actually pretty true in general for businesses out there, you know, particularly like brick and mortar kind of businesses have a lot of high overhead. Yeah. So to get a 17% edge, and here's just a spreadsheet that I use for that. Now the break even on each of these legs is 75, 60, and 50%. Yeah, and each of those is 17. So what's cool about this is that depending on what you want to do, you could choose any of these and they're actually pretty identical. Or you could stagger them out. Yeah, you could stagger them out, because if you don't mind holding out, or you've been trading for a while and you're just like, okay, I'm just going to take it, then all those edges are statistically identical. Now you could weigh into it and say, well, yeah, but I don't want the emotional cost of sitting and trade for a long period of time without any additional. I would actually be better off if you chose to take those other two lots and put them up here. Now this is 86.60, yeah? Now 66.60, so it's a little bit smaller if I just scalp only. Now, I could go back over to my periods tab and see, well, yeah, it's only about 3 minutes a trade especially if I take these 2 periods of the day out of there. Yeah, during the early part of the day, 2-3 minutes a trade, sometimes 4 minutes, yeah. But if I go back here and I just make it 1 and 1, the time that I'm spending in my trades is more than doubling. It's more than doubling, yeah. And so I might make a choice here based on that to move towards scalping, or possibly I could maybe trade 3 lots here and use 1 lot as a runner. Now, these are the same things that you put into your ATM strategy on your Ninja. Each of these, this was actually designed around the Ninja inputs for your ATMs. Yeah. So I take the 3 trades off with the 92% and leave the other one running at about 80%. Yeah. And then every once in a while you possibly might even get caught. You know, if you fiddle with your target, every once in a while you get caught in a 40, 50 tick trade, stuff like that. All different kinds of possibilities. But you can massage between the time and trade and what you're doing with it. Yeah, what you're doing with it. Now this right here shows me all the different individual trades. This is where you can really get down into the nitty-gritty and start seeing what happened. Yeah, and start seeing what really happened. So let's say I want to see this trade right here. I'm like, well, why do I get a loser right there? I want to go look at all my losers. All I got to do is click that, and it'll take me right there and draw a circle around it. Yeah, so I can study that. Yeah. Well, this is the period of the day that we were talking about, that it's not all that great. Yeah. What if I decided I wasn't going to trade during the F and the G and the H period? Yeah. Well, I could go over here and I could look at those periods, and these two would increase if I took those off, because those were losing 30-minute periods. This one wasn't very much. So if I take those periods off, I'll actually have a gain. What's that tell me? It tells me I got an hour and a half in the middle of the day that I could, I got an hour and a half in the middle of the day, I can go have some fun. Yeah. Improve my lifestyle. Yeah. Stuff like that. Yeah, so let's look at what the probability field might look like around the stop. Yeah, we played around with these guys a little bit. You know, we can just go back to one lot, one lot, one lot. You know, we start asking, well, what if we wanted to squeeze it a little tighter? Yeah. Now this gets into a whole lot of really interesting stuff. Let's say I knock that down to 12 ticks. Oh, 8,800 bucks. Yeah. Ooh. Yeah. That's 9,400. Well, how much more can I squeeze this by? This seems like it's a pretty tight little strategy. Yeah. Oh, yeah, by the time I get down to 10 ticks. So there's no difference between 10 and 15. Look at that, 88, 60, 15. Yeah. Now, if I can milk that for 10, then that changes my my edge stats significantly, doesn't it? Because now my break even, instead of being 75, 60, and 50, it's now 10. Now my edge is 25, 27, and 27. Now my poor dad was running his furniture store for 2%. Yeah. And here's a system that that gives you an edge of 25% over break even. Yeah. Now, it's pretty rare that you can make a stop smaller and smaller and it actually improves system performance. Yeah. But what we do know is that it changes it a little bit. It doesn't change it a lot. So it's also strange that we got 88.60 on the 10 here, and if we bump that guy up to 15, you know, it's 88.10. Those are not statistically different. If I drop down to 12, it's kind of in the middle, right? Oops. 12 is kind of in the middle, right? Now, what happens if I make that stop 999? Yeah, performance goes way up. Yeah. Now, we're kind of playing around with this as a scalping kind of a system, but, you know, what if I made that initial stop 999? In other words, it's not there, or I'd make it like, you know, 50 or something. Even 50 won't work. 75. Yeah. And then, you know, what if I had this at a, you know, 40 tick target? Now, that's still 64%. Yeah. So, you know, and depending on what time of the day. So now I could go see, well, what kind of a statistical profile does that have? My prediction would be that approaching this way is going to be better earlier in the day. Although this might carry over to the next day with numbers like that. So let's peg it right there. And my theory was that the earlier in the day you are, the better it's going to be. You know, we just cut half the day off. You know, this is how I used to trade, actually, very much like this. Yeah, I would let it flop around, something like that. So, but still, you know, some really nice win percentages here. Even 57% on a 40 tick target. It's pretty good. Yeah, usually so. I might need to get, I don't really use that trailing features that much, Kevin, but let's take a shot at it. I might need Chris's help on that. So, and I haven't used this for a long time, so I'm going to have to remember. Hey, Chris, if I forget how these worked, if this goes to, you know, let's put that back to 15. I think if I put in a, if it goes past 10, I think it moves the stop up. Let's see what happens with our markers when it does that. Oh, so Chris, here's the question. Here, I'm just gonna I'm gonna activate your mic, Chris, so we can get on here for that. Yeah. Bear with me a minute, guys. We're just doing this family style. Yeah, I'm not. Just impromptu webinar here to get the information on this out. Yeah. Let me see if I can find. Okay, Chris, there you are. Okay, Chris, that puts your mic on. And then if you could guide me on the break-even stop and the trailing stop.
Okay. Am I coming through?
If you are able to turn your mic on.
Am I coming through? It's got a little thing on it.
Yeah.
Are you hearing me, Rob?
Yeah, I'm showing your mic is on. Oh.
All right, I'm talking.
Okay, there you go. I didn't have my speakers on. There you go. Yeah, so Chris, can you tell me, or tell us and everybody, what's the break-even stop? How do we best utilize that in this particular example?
Yeah, like you had mentioned before, I'm trying to mimic the behavior of the NinjaTrader ATM. So
right.
Break-even stop, when you reach a point of 10 ticks of profit, it will place your stop, in this case, at your entry +1.
Okay, so
you could.
This is the level at which it comes into effect, or the trigger level, and then it moves at entry +1. So correct. This one, same thing as a 10. You know, where I go, 12 ticks, and then it's entry +1 also.
No, that would actually be the maximum profit minus 10. So it's trailing.
Okay, so this is maximum favorable excursion number?
Correct. It actually would be that many ticks below maximum favorable excursion.
Okay, so I'd want that number to be a little bit bigger, yeah.
Yeah, for sure.
Yeah, probably still like 8 or something.
Right. So at that point, it'll trail behind. And with the stop dots on the chart, we'll actually see the different colors depending on which stop is active at that point.
Okay, so let's do this guy first. And spot one of these guys.
So at 10 ticks. Okay.
I see, yeah, so it moved that dot down right there.
Right.
So once it went 10, it started trailing at 2.
Yep.
Oh, that's kind of
Well, it
cool.
put it 2 ticks from entry for the break even. Right.
I'm sorry, say that again.
It put it 2 ticks below the entry in this case for that trade.
Really? Because I was looking at that dot right there,
Mm-hmm.
and it just moved it down another one. The entry should have been up here. Oh, the entry itself. Yeah. Okay. Yeah, I got you.
Right. Right.
Yeah,
Yeah,
that's
the
very
yellow
cool.
dot there believes the open of the next 30-minute period.
Yeah. So this being the entry, and then it moved it 3 ticks from there.
Right.
All right. Well, I'm going to have to play around with that some.
Yeah, 3 ticks from there. Correct.
You know, I'll be honest with you guys. Following along today, I have spent I have spent 10,000 hours with TradeMarkers. I mean, probably not really, but I mean, just when I got this thing, and you know, same thing happened with Chris, same thing happened with Mike and any number of other users, because this enables you to start seeing, you know, this is why I have taken this time playing around and kind of juxtaposing these numbers back and forth and going back and forth between the periods tab, because I can see how changes in my parameters are influencing. I could even go back and forth with the graph and see how it smoothed it out. You know, we could do things like that. So, you know, I could say, well, you know, do a 3 here. You saw how that graph was going like that. You could start comparing the graphs and things like that. But, you know, I like working more with these periods and things so I can really kind of see where those are. I like going into these different trades and having it show me where that trade is. You know, what kind of environment was I in when that happened? Is there anything that I could have done, or was that absolutely correct? It's just an anomaly, because we have such high win percentage with this thing. You don't really expect. Now I'll tell you another thing with these T2s, and especially with using the smart price band. You know, you get the T2. You know, this is a I'm sorry. Actually, I didn't mark this one. I missed that one. It's actually another cell there. I probably missed some. So I'll go through 20 days in just a pretty short period of time. And then we pick up this kind of T2 sliding up here, and it gets caught in the cell. When a T2 fails a high percentage of the time, within a short interval, you're going to pick up a trade or a T2 going in the other direction. You get a sliding T2 right here. And you pick up the buy there. And then this one's kind of marginal. I marked it anyways. And T2 there. Yeah, but pretty remarkable little system. Now let me see what else. This one will show you the trades, like I was saying. This is just a traditional performance summary. Yeah. Average win-loss ratio is 1, and 80% profitable overall. Yeah. Average time in trade is 12 minutes. And you know, you can come back and say, well, yeah, but I don't want to spend 12 minutes in the trade. You know? And you can start working those numbers from there. Yeah. Now, I had mentioned before, so we could just like clear all this off of here. Well, first I could just, here, I'll show you how you save it. So let's say that I'm doing this, and you know, Kevin's in here, and sometimes Kevin and I share files. Let's say I want, you know, I'm going to share that with Kevin. Yeah. And I just say, save that, and it'll name it for me automatically, so I don't have to save it. You know, I don't have to think about it. And I just click save. Yeah. And then what I can do is I can go up over here, and I can just take all these markers off the chart. It's clean. Yeah. 20 days of clean. Right. Now we had talked about we had talked about just being able to mark a strategy like this. By the way, a strategy like this works any time of the day, but I only mark it during the hours that I would be inclined to be trading. Yeah. So, you know, you can take a day like, let's take a day like, yeah, I'm gonna take this day right here, yeah. It turns cyan there, turns red there. Do I have T2? No. Just kind of flipping here. And then I get a T2 right here, you know. So just pointing out how quickly we can go through these things. It comes up here, the smart price band changes color. I've got it, oops. I've got another T2 right here. A T2, oops, I had a T2 here, not this one. So I don't need to mark those out or anything. I get another sell over here. I get a buy here. Yeah. It's coming down. Is that going higher? Yeah, it's kind of sliding. Okay, that's a T2 sell. Yeah, I can just go jamming through this chart, and I can just mark it out. Yeah, and pick up a loser there. Sometimes you got to re-enter on these things. You know, sometimes this time of the day isn't the best, especially after a long run, that kind of thing. You can start running different kinds of filtering schemes and things like that. Yeah, and K period, you don't really pick up a whole lot more on this particular day. So you can jam through this chart, just click, 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 click. Sometimes I'll just have an idea. I'll go click. By the time I've clicked my 5th, 6th, 7th different button, I know that it's probably not going to work. Yeah, just because TradeMarkers helps me to do that. This particular strategy, we have been doing this strategy in our trading room for over 5 years. Yeah, so nothing new with that. Yeah, nothing new with that. We teach in our trading room incredible numbers of different strategies. I do not recommend, if you just want to learn about strategy stuff, yeah, come in and hang out with us. You'll learn all kinds of stuff, ask questions. But we've got some basic strategies. One of them is this T2. And but I strongly recommend that you, if you're serious about trading and making a living trading and being a professional trader, I strongly, strongly, strongly recommend that you come in the room and just pick one of the things that we teach and become an expert at it, because you can't learn 27 of them all at the same time. Yeah, there's all kinds of things that I could mark out on these charts. Like for, you know, here's 3-dot pattern. We use this all the time. 3-dot pattern, use it all the time. 3DV, we use that all the time. Yeah. There's 3-dot pattern, 3-dot pattern, 3DV. Yeah, we do this stuff all the time. 3-dot pattern. Yeah. So, you know, there's tons of trades on the screen that we teach in the room all the time. And so what's the 3-dot pattern? 3 lower dots, 3 lower dots, 3 lower dots, and the next hook. 3 lower dots, 3 lower dots, 3 lower dots, and the next hook. 3 lower dots, 3 lower dots, and the next hook. Yeah. On and on and on. So, but I didn't want to make this webinar into something that we do in our trading room. But there's tons of opportunity for learning all different kinds of things. And then refining your actual usage of it with TradeMarkers can really speed up that process. Yeah, no, TradeMarkers is for refining what you already have. Yeah, so let's go back to our PowerPoint. I think that we've got a pretty good handle on this. Let's go back to our PowerPoint. I think we've covered all these things: the setting, win-loss, results, different legs, gross and net results, expectancy and profit factor. I think we didn't really talk about that. Chris has expectancy on here. and the profit factor. What's profit? Profit factor is the total amount gained minus the total amount lost. Yeah, this is a pretty highly efficient system when you get a profit factor of 4.15. Almost unheard of, actually. Yeah. Expectancy tells you how much you expect to make on every trade. Yeah. Maximum favorable and maximum adverse excursion. You can look at these numbers and have it tell you, see, we're capping these trades with these targets. Yeah. And so you can actually go in using these numbers and you can massage that. Or you can do it the way I was showing you also. Yeah, just functionally seeing what you're getting by playing with the different numbers. I'm a feeling-oriented kind of person, so I like to just go in and play with the numbers and get an intuition of what's right with that. Breakdown by time of day, half hour a day, etc. Using offset targets. Oh, wait, we didn't cover that. I really wanted to cover this. Discounting. Yeah, discounting. So if I decide to take a one-tick discount on this trade, so check this out. I got a system here with 10,000, 92, and 78. Yeah. I'll put a one-tick discount on that. Whoa. Whoa. Yeah, what happened there? Yeah, what happened there? Just by changing the entry offset by one tick.
I think he deleted the markers, so we lost.
Oh, is that what happened, Chris?
Yeah, somehow
okay.
We only have 11 trades left. Only have the ones
I was wondering if it was going to let me cheat that. Okay.
You just reload the file though, because you saved it.
Yeah, no, we'll reload the file. We'll reload the file. Okay. This isn't fair. Okay. Recalculate. It's taken the it's leaving the trades on there, Chris. What's going on here? All right, I'm going to delete them and reload them.
Yeah, it'll leave the ones that you've drawn on there and then add the file to them.
Okay, I'm just going to go to load file and reload it. Load trade markers and settings.
Yeah.
Loaded 76 trade markers.
Mm-hmm.
Okay, and then we're going to go back here. Yeah. 10,000. I'm going to take a one-tick discount, and it improved the system performance by a little bit. Yeah. Now that means I could actually milk these out for a little bit more. Yeah. What if I took a two-tick discount? Yeah. And I can start playing these different numbers. Yeah.
Yeah, and you can see the number of trades that you skipped now is 13.
Yeah, yeah. You want to keep an eye on your missed trades number. No trades. Yeah. But over the two-tick discount, I've missed 13 trades so far. Yeah. Whereas if I go back to -1, I missed only one trade. Yeah. So, you can also test around the boundary of the entry and see how much you can massage that for. On a strategy like this, you can typically milk it for a lot more than you could if you were trading on a really fast 2 or 3 tick chart or something like that. Yeah, on those, a lot of times the entry will have you kind of squeezed. Yeah. But on a chart like this, I mean, I wouldn't doubt that you could. Now you start getting 23. You start losing about more than a quarter of your trades if you go 3. Yeah. So yeah, but it looks like -1 was pretty good. So what might that also tell you live while you're trading if you've tested out this boundary? It might give you some feedback on how excited or reactive you should be in getting your trades filled. Yeah. Because if you're like super, oh, I gotta get in this trade. No, you don't. You can milk it for another tick, no problem. 90 per 98% of the time, or something like that. Yeah. Well, that's nice to know. Yeah, that's nice to know. So let's see what else. Let's pull our PowerPoint back up here. Okay. And let's look at the next slide. So this is something came from a user. The major change that came from using TradeMarkers was looking for discounts on trades. Using TradeMarkers, it was easy, and it was possible to determine that 80% entries allowed for a 2-tick discount, right? So actually this testimonial is telling us exactly what we were just doing, on a 5-brick chart, which is what we're just doing it on. Trades missed due to looking for the discount were not missed, as the increased win percent was reason enough to not concern myself with this missed trade. It was an issue comfort with my strategy. This, of course, will not be the same for every trader. One interesting point I picked up from a talk by Mark Cook, is that traders are like belly buttons. There are innies and outies. And this is actually core to our discussion today, innies and outies. I'm kind of an outie myself. I like to go in, grab it, and get out. Why? Well, partially is because I'm running a trading room, and it's hard for me to trade and be helping other traders at the same time. So I set my ATMs, and I enter the trades, and they run themselves through to completion. I don't mess with it. But if you're there and you can give the focus to it, you could be an innie and stay in trades a little longer. Some have to be in all the time, where someone just want to get in and out. So I'm an outie. That's a funny expression. And I know my expectation helps me wait for the setup and not stress too much about missing a few good moves. Interesting, yeah. So as we had said in the beginning, it can help you find your trading sweet spots. It's not about the difference between backtesting. We're not trying to find something out of the data here. We're trying to refine something and make something that is good better. We've got trading methods coming out of our ears in the trading room. I mean, so many that I have to tell our members daily, focus on one thing until you become an expert at it before you move on to the next, because we just got stuff coming out of our ears. Hundreds of different possibilities, probably. So pick one thing. The most basic thing that I teach is this T2 strategy that we looked at today. And we teach Bayes' theorem and all kinds of other things in the trading room. I think I got a slide here for the trading room. So we've been using the chart that we've been looking at as part of the Smart Patterns trading system that we use in the trading room. And it's not uncommon, 85+% follow through. You've seen that today, just on our most basic strategy. It's flexible. You can trade in all different kinds of ways with it for all different kinds of things. We got daily targets that we put out every day. Sometimes these things 40, 50, 60, 70 ticks away. And we hit them almost every day. It's amazing. And Smart Patterns trading system loves a volatile market. And we got tens of thousands of hours of people using these things and refining it. And then when TradeMarkers came along, there's a lot of sharing started going on. And it's really been an awesome ride. So if you already have a strategy, then no problem. You've got it. TradeMarkers can help you to refine that down to something that's really going to work for you. I can tell you right now, you talk about 10,000 hours of coding. Chris has spent inconceivable amounts of time and refinement making TradeMarkers work. And it started out as a simple question, and just people are in here that use TradeMarkers all the time. Kevin uses it with great success. Yeah, thank you, Kevin. This is we kind of had a soft release of Trademark just for room members. This is our official release. It's available at indicatorsmart.com/TM. I have a special pricing there. I'm going to Bali, and so I need you to get it by Monday. Yeah, we got $250 off of the pricing until Monday. If you do not have a strategy, there's two ways you can approach it. You can get Smart Patterns trading system, and or the trading room, or both. Yeah. And like I said, we have no shortage of trading methodologies that work. Yeah, and TradeMarkers can really help you refine down into that. Yeah, but the link for this is trademarkers.com, or I'm sorry, it's indicatorsmart.com. I think I have a link here for you in just a minute. So TradeMarkers is really, I mean, I think before TradeMarkers, before Chris coded this thing up, we thought that 84%. I hit at about 4 years, it was almost like there was an overhead threshold that could not be broken, and it was 84%. 4 years of the trading room, 84% was as good as we could do. Yeah. And now, because of TradeMarkers, I don't even look anything unless it's 90+%. I don't even bother with it. If it's not 90+%, I don't even take it. Yeah. And then when you get probability stacking, a lot of these things, these happen, as I mentioned with the Bayes theorem we talked about earlier, sometimes upward 96, 97, 98, 99+%. You know. So TradeMarkers will enable you to reduce your time and trade. If you're new to trading or you're struggling with trading, I cannot tell you how huge that is. I cannot tell you how huge that is. You've been doing it a while longer and you've got, cojones for it. Get more out of your trades if desired, if you choose. Yeah, these things are, how you trade is a lifestyle choice within the framework of the probability cloud that you're functioning. I hope that today, by looking at how we juxtapose all those numbers, and it all works. It all works. That's not just because of this system we've been doing for 5 years. It all works. So the way that you're trading should actually not be I feel lucky if I can just, it shouldn't be that. It's a lifestyle choice. The way you trade is a lifestyle choice. I'm suggesting that if you're new to the trading, that you make a certain lifestyle choice for the way you do that initially, and then transition into being more relaxed with it and taking more as you get better. Yeah. What are we talking about now? We're talking about evolution at this point. Yeah. Because the last thing you want is this, because if you're neurotic, you get negative emotions, you can't trade. Yeah. So TradeMarkers helps you to really know your outcomes. There's so many traders out there that don't have a clue. They just don't have a clue of the kinds of things, the kind of edges that we're dealing with and what we're talking about here. Yeah. You can study your wins and your losses for even more learning. You can hone in on different, you can go see, well, within any given trade, is there a certain kind of a pattern that was going on within that? Like, for example, what if I don't trade during FG, or GHI period? Yeah, we already talked about that. Yeah, sharing the results with others can really improve things. Collaboration. Yeah. Figure out what works and what doesn't real fast. Maybe you find out that your strategy just doesn't hold water. Yeah. Well, we have resources for you. Quickly scan losing, winning trades, learn what happens. You can do this in real time, as I said, which I can't demonstrate right now. So that's what we got. This tells a little bit about Oil Trading Room. We've been doing this for over 5 years. When you bring the trader oscillator in with the smart momentum and the price bar patterns and things like that, there's just all kinds of opportunity for you there to learn and to use statistics and things like trade markers to really kick your trading up. Yeah. So indicatorsmart.com/TM. Let me double check that right now, make sure it lands in the right place. Yeah. /TM. And I will, tomorrow, I will post this webinar onto that page. Yeah. indicatorsmart.com/TM. If you're interested in learning more about trading in general, strategies, strategy development, trading, oiltradingroom.com. Yeah. All right, guys. That's what I got for you today. This one is this. We had a lot of webinars going on, so I was a little behind the curve on getting this today. I would like to thank you guys for coming in today and giving us the opportunity to share trade markers with you. It's been life-changing for many. Yeah, you can see Kevin likes it. And the room discount code, if you watch the video there, if you guys will bear with me for a minute, I'll get it to you. Hold on just a second, and I'll get it for you. I think it's black gold. Yeah, so, or did I have it here? Yeah, I don't have it on here. Coupon. Yeah, so the coupon code that I want you to use for a nice discount at the room is, it'll give it to me. Black gold 249. Yeah. I'm going to put that in the chat here. You bet, Dave. Black gold 249. Yeah. All right, guys. That's what I got for you today. Thanks again for coming in for the webinar, Trade Markers. Yeah. And take advantage of it. And like I said, please do so before Monday because I'm going to get smashed in with the travels and things. And I want to make sure that we're able to give you the customer support that you need. Yeah, for the room, black gold 249. Okay, guys. Thank you. Thank you. If you have questions, contact me through indicatorsmart.com or oiltradingroom.com. Yeah. Thank you. Thank you. And we'll see you on the next one.